The Bank of Canada came out with its latest critical announcement for interest rates in the economy today. But if you're looking for help with things like housing or food costs, there's not much in it. Al Sweeney has the details.
With housing prices way too high for many would-be buyers, along with sky-high rental, food, and energy costs, the Bank of Canada says this is the time not to do anything.
Monetary policy is working.
The bank's governor says its high interest rate policy has brought down inflation to 2.8% in February. But their inflation goal is 2%, and they say they're not cutting interest rates until there's evidence that it's happening.
I realize that what most Canadians want to know is when are we going to lower our policy rate? What do we need to see to be convinced to cut? The short answer is we are seeing what we need to see, but we need to see it for longer to be confident that the progress towards price stability will be sustained.
A mortgage expert says today's bank announcement doesn't make things better or worse, and the bank is taking the right approach.
I don't blame them to be cautious and not create any panic in the market.
He says if the bank says the wrong thing, like interest rates are coming down, it could make conditions worse.
If they were to say something like that, that could potentially increase the demand in the real estate housing market. It can create, I want to say a panic, but it could suddenly increase housing prices, which of course will increase inflation as well too.
One of the critical questions for today's announcement is, what does it mean for average people and the housing market? McMaster economist Colin Mang says the bank is in a difficult position facing economic uncertainty. But what about someone who owns a home?
For anyone who owns their home and they have a mortgage, particularly for those folks who are going to be renewing their mortgage over the next year, these high rates continue to be an issue.
Or anyone who wants to buy a home.
For someone who's looking to buy a house, it's going to mean that mortgage costs are going to continue to remain high, and we're going to continue to see problems in the housing market.
The Bank of Canada acknowledges that its policies got us here.
We know that our policy actions directly affect mortgage interest costs, and we know that when it becomes appropriate to reduce the policy interest rate, those mortgage interest costs will start to come down.
It's not saying when it's going to cut rates. Maybe June, maybe not. Al Sweeney, CHCH News, Hamilton.